Hello, everyone. I think we are ready to get started. I'm just making sure that this is working. So, welcome to this week's Market Outlook. So, if you haven't seen these before, we do these every Wednesday at 12:30, and it's really a quick catch up with what's going on in markets, some of the levels to watch over the next few weeks. So, look at the major markets. Let me just bring up the risk warning while I'm talking. Look at the major markets: euro, pound, stock market indices. We'll look at S&P, Nasdaq, and the DAX as well, and also oil and gold. I think it's been an interesting week so far. I think particularly with stock markets, we'll look at those in a few minutes' time because we've seen those markets under some pressure. The S&P in the US and the DAX over here. I think the DAX has lost something like 500 points at its worst level over the last 5 days. So we'll take a look at that in a bit more detail. So I think that risk warning has been up for long enough. Any questions afterwards, drop me an email. My email address is david.jones@Capital.com. And of course, to find out more about the company, go to the website, Capital.com, not surprisingly. And you can follow me on Twitter for updates and stuff during the week. But let's get started. I think we'll start with the pound. We've had that GDP data out this morning. Came in quite a bit better than expected, I think. We saw growth of 0.7% for the UK economy in the previous 3 months. So I think expectations were for maybe 0.3 to 0.6%. There was a bit of a wide band of expectations, and we've seen a lift for the pound. Let's just take a look at this. I mean, the picture for the pound, I think, is pretty much the same. We had pound US dollar. We'd seen this market under pressure since April of this year. And then mid-September finally broke out of that downtrend that had been keeping the market lower, pushed up to 133, sold off last week, or started sort of bottoming out last week, and we've seen it bounce back. So for me, in the short term, I did a trade on this early in the week that I'm still in. I'll talk about that when we look at the short-term chart. I think for me, the obvious objective, let's put some of the squiggles on here. Let's add maybe an RSI onto here. Let's make that a 10-day RSI, and then we'll put a MACD on as well, just to make it all look a lot prettier. MACD, here we go. Right. So for me, considering we have broken out of this downtrend, pushed higher, just because a trend breaks doesn't mean the market's suddenly going to go bang off to the races. We've seen a pullback and we've seen the buyers come back in. So for me, the logical target, let's get rid of that line. The logical target is for a run back up to those most recent highs from September the 20th, around 133. So the market's currently 131.66. Let's just flip this over to an hourly chart just to see this in a bit more detail. We had the pullback from 133 down to October the 4th, and we saw it. I think last time around on this webinar, I was talking about these low 129s. I'm a big fan of looking at previous major levels in the market, and clearly on the way up to that trend line break, let's get rid of that trend line for now as well. On the way up for that trend line break, 129 had been 128.95 had been reasonably good support. I've seen the market push higher, and it turned around at 129 and pushed. I ended up buying this on Monday. Where are we now? So it would have been the 7th. And it was really just because we saw 130 hold. So it moved from 129 to up towards 130.40 on Friday, sold off to 130, was a little bit weaker coming into Monday, but 130 held. So I ended up buying it at 130.50, something like that. The market went up, came back again. Yesterday, once again, we saw 130 hold, and again here, and the market has pushed higher. So 130 so far this week has been really good short-term support. So if we did see the market under a bit of pressure from where we are now, just watch these lows, for the week so far and for last Friday, because it's been a really pivotal level. So 130 has held. I think like I say, for me, the immediate objective is a run up to 133, those highs. Yeah. So I think because we have seen this shift in the pound over the last month, this downtrend finally break, I think we're back in recovery mode again, and it looks like a buy the dips market. And if we break 133, the next objective, not a million miles away, 133.60 looks like a problem, and then maybe up into 134 plus, that sort of area. So I think, so again, I think for me, that sort of bullish, that short to medium term bullish view only changes if we lose these old 129 lows. Maybe we've got a risk then of a deeper sell-off. But I think for now it's performing as you'd expect this week. Let's see what the reaction was like to the number at 9:30 this morning. Let's just zoom in. So initially, looks like it sells off, which probably isn't surprising. A stronger UK economy. Actually, no, that is a surprise. Actually, so a stronger UK economy, you would suggest, would mean that we could see rates rising sooner rather than later in the UK. But it sold off for about 20 minutes, 25 minutes or so, and it's reversed that, but we still haven't taken out the highs for the day. So I think for me, it's the hourly and the daily charts are the important ones for the pound at the moment, and we do have big support left at 133. So I think the momentum at the moment is up for pound US dollar. Let's see how that pans out over the next few days. I think the euro has been a bit more confusing, to be honest. Let's take a look at our euro dollar chart. Let's bring that up and let's flip it over to a daily chart. So I must admit, I would have been caught out, I think, if I was trading this week. Let's look at the bigger picture here. So euro dollar back in August pushed as low as 113. We saw it bounce back up to 118. 500-point recovery. That is a chunky old move for euro dollar. But we had seen 118 to 118.50 has been a real ceiling for the price of euro dollar. So when it pushed up towards 118, third week of September, not very, but overbought on the RSI, and it did actually roll over. Then we went oversold last week, and it looked like these lows at sort of 114.50, 114.60 were holding. But yesterday it did blip below them. So I think if I was trading that yesterday, I'd have had a stop below there, and I would quite probably have got taken out. So it traded down as low as 114.30 yesterday. That's the move. And it's bounced back a bit today. I don't know, what would you do with this now? I suppose you could take the view, if it's broken below those lows, it is still weak. So maybe if it rallied much into sort of 115.20, 115.40, we'd want to think about going short with stop losses somewhere above these old highs. Okay, but I think it's a bit of a confusing picture. I think euro dollar, because it looked like it was holding ahead of 115, blip below it, then recovers, then it blips below that latest low, and it's recovered as well. So I suppose if we took a view over the next couple of weeks, it wouldn't be ridiculous to expect a run back up towards 118. But I think in the short term, it's quite a tricky market to call. I think not as clear as pound US dollar at the moment. But let's take a look at these stock markets. I think these are really interesting at the moment. We've seen some really big sell-offs during the day, relatively speaking, on US stocks. Let's look at the S&P 500. Let's just drag that across. So, it was only the beginning of this month, or actually no, probably third week of September, the S&P 500 pushed out to fresh all-time highs. So classically a bullish move if a market breaks out and hits fresh all-time highs, and we saw that in the S&P. Let me just spotlight that so we can make it fill the screen. So we did see that in the S&P, but you can see, just looking at, if we zoom in, the recent candles, these are daily candles we're looking at here over the last week or so. They've all been red, so we've seen consistent down days for US markets. But I think, again, it's interesting down here, just picking up on the levels. If we look at the RSI down here, because this trend in the S&P, we'll look at the DAX in a minute, but since the trend in the S&P since April has been so strong, it hasn't gone oversold on the RSI, on a 10-day RSI, since March. So it's more than 6 months since it went oversold. We are getting pretty near to an extreme again on the S&P. Looking at the RSI down here, we're getting pretty near to an extreme. And what's interesting for me, these old lows, just before it pushed out to fresh all-time highs. So around about 28.65, the market did trade down to there within the last couple of days and has snapped back. So for me, because that trend is still up, that recovery trend off these old lows is definitely still up, I'd still be expecting the market to snap back and have another look the 2940 sort of area. Let's take a look on the hourly charts to see this in a bit more detail. Here we go. So this is the sell-off over the last week or so. Let's just shrink these down because I think the chart is more important here rather than the squiggles. So the market pushed as high as 2940, sold off. There's that move to that old support, and you can see how quickly it does reverse off it. It probes down, has a look, and then the next hour, bang, it's up again. But I don't think we're quite out of the woods just yet. We've got the highs from yesterday have been a barrier, as they were on October the 8th, the day before yesterday. So 2896 to 2900 is proving a barrier for this market. So again, if we saw maybe a blip of strength this afternoon, I don't think it's ridiculous to be a seller ahead of here. But the big level to watch, I think, are these old lows down at sort of 2860, 2865, because they were important levels. Here we go on the hourly chart on the way up. So there we go. So we're doing that. And so they blipped down and it's rallied. Let's see what happens. Okay, personally, I'd be expecting a turnaround, but that doesn't mean it has to come today. Maybe we'll see another visit down to those sort of 2865 levels. Let's take a look on the dailies just to see what we should be looking at if these levels break. Let's just zoom in. I think if it loses 2860, there's a fair bit of fresh air, down to the low 2800s. So I think for the US market, 2865 on the S&P is the one to watch. So have a quick look at the NASDAQ. And then we'll have a look at the DAX, which has been, I think, even more volatile. So let's look at the NASDAQ 100. Let's flip this out again to a daily chart. So actually, this looks more bearish. We have seen, tech stocks taking a bigger hit over the last week, but we saw all-time highs of 7,700 beginning of the month, 1st of October. The market yesterday, or day before yesterday, went below 7,300. So we've seen, a 400-point turnaround for the NASDAQ, which is a little over 5%, isn't it? Something like that. So again, I think it's going to be these old lows, this sort of 73 to 7260 area. Let's see. It's very oversold. This is the most oversold it's been on the RSI since March of this year. So again, more than 6 months. But let's see what happens. See if we see US markets snap back. But I think it's been a really interesting week, even though there's been not much data out in the first couple of days of the week. It's still been an interesting one. And later this week, we see US earnings season starts again. So we have on Friday the banks. I think JP Morgan and Citigroup, off the top of my head, are a couple of banks that report on Friday. So let's see what happens with US stocks there. But some obvious levels to watch. I should mention as well, actually, just what I'm going to bring up, the DAX. We did a promotion. We often do these promotions for clients, if you're a client, of zero spread trading. And we did one from 9:30 till 10:30 this morning on the pound US dollar. So if you're a client and you've got notifications on from your app, you'll get notified of those. So we do these zero spread promotions now and again. So just make sure you have notifications turned on. And if you're not a client, of course, then if you are, then open an account and you'll get these zero spread promos as well. We do them on oil, the pound, gold, Dow, that sort of stuff. Right, let's take a look at the DAX, because this has been a really volatile market. So this is the daily chart of DAX. I think this has been really interesting, the DAX, because usually what goes on with US stock markets affects the rest of the world, right? So if US stock markets are going up, as they have done, broadly speaking, since February, when they fell off a cliff in late January, they've dragged the rest of the world higher. But the DAX has not been doing that at all. Yeah, so since May, the DAX has just been pushing lower. And yesterday, I think you can see it here, yesterday pushed to its lowest level since April. So yesterday, the DAX very briefly hit 6-month lows. So the DAX has been doing its own thing. And our trend, I suppose, looks something like that on the DAX. And that trend has held that market down. So the DAX is another interesting one, because down at these levels, over the last, the last year or so, whenever we've seen the DAX sort of go sub 12,000, the market has snapped back and we've seen a recovery. We had it back here. We had it only went there briefly in Feb, again in March, again here in September. So the market has seen value for the DAX below 12,000. It's the same thing can happen again. It's pretty oversold, as you'd expect after such weakness. The MACD still looking a bit bearish here. But I think it's another really interesting area to watch the DAX. I think clearly it depends what happens in US markets. If you see some US market strength, you'd expect that to start feeding into the DAX. But it's an interesting one to watch, I think, down at these levels. So from 11.7, the March lows, so the 2018 lows, through to 12,000, we have seen this market turn around. Let's take a look on the hourly chart. Here we go. So here's the size of the decline in the DAX. So if we went back to, well, the beginning of October, it was about 12,370, and it went as low as 11,800 yesterday. So a 500 odd point move in the DAX so far. And there was a good trade in it this morning because it did trade up towards sort of yesterday's highs. So yesterday's highs late in the session, I think it was it. Oh, actually, what was late yesterday? October the 9th. Yeah. So yesterday's highs were sort of 11,980 to 12,000. You can see this morning, 7:30 to 8 o'clock this morning, it's sort of flipping around this 11,980 to 12,000 area, which had been quite the barrier, and it failed again. You know, the market dropped a good 100 points off there. So in the really short term, let's watch to see if it can crack 12,000. But it's still weak. You know, it made a new low for the move yesterday. I think it's a market that is still weak, and we need US stocks really to bounce back to lift this market higher. We'll have a quick look at gold, which is boring. Then we'll look at oil, which is a bit more exciting. So gold, let's just flip this onto a daily chart. I delete that arrow every week and it keeps coming back. Let's just have a look. Yeah, the trend from these highs, that is still in place on gold, and that hasn't changed. And it's been pretty flat now for 6 weeks, the price of gold. You could argue, you know, because what it does, it just flips around the 1200 mark at the moment. So you could argue with it trading at 1188, that, okay, maybe it's a short-term buy. It's not what I want to do personally, but we have seen 1180 hold this market up since late August. But it needs to crack, you know, 1210 to 1210, 1210 to 1220 to shake this weakness off. So it's a pretty dull market at the moment, gold, until it breaks out. But crude is a lot more interesting. Let's just pick the spotlight up on that. Where is it? Crude oil. And if we flip it out to a daily chart, first of all, here we go, and just drag that across. So we did see pretty much 4-year highs for US crude at the beginning of the month. So traded up to 77, near enough, $77 a barrel. It sold off towards the end of last week, but this week we've been very much in recovery mode. And I think, you know, the big trend for crude, you know, you can't argue with this trend from those lows back in June last year of $42 a barrel to where we are now, 70, just below 75. You know, we've got trend line support around about 66. The old lows from here, September, just above 66. Big lows left in sort of 63.5 to 64. The trend for crude still definitely up. Looking at the MACD, you know, it's maybe a bit extreme and a bit overcooked at the moment. The same on the RSIs as well. But any weakness in oil, I think, still looks like a buying opportunity. You know, even if we saw it clobbered back to 68, it's still above that trend. So I think it's an interesting one to watch. If you look on the hourly chart, I think we've got I think crude oil inventories are actually tomorrow because of they're normally on a Wednesday afternoon, but I think because of the Columbus Day holiday, they're delayed a day this week. So we had this run up from mid-September, which looks like it's broken out, but it looks like we have set a fresh sort of support level this week to keep an eye on, $73. So for me, if I was buying it now, the closest I would want my stop would probably be the other side of 73. And it ties up with this sort of spiky low from the 1st of October. So despite this small sell-off, it hasn't changed the bigger picture. So I think the trend still most definitely up for oil. So if it slipped back to the low 73s, I think it's one to watch. And after that, we've just got so many pockets of support, you know, 71.30, 70, 68. There's support left all the way up over the last month. So for me, I think the bias for oil still definitely seems more up than down, you know, looking at what the chart has done here. So we'll see how it performs. But I think the big picture view for oil is the important one. And that daily trend, you can see it there, pushing back almost to those November highs from 2014. So it has been a great run. And at the moment, at least, the big picture doesn't look like it's changed. So just to sum things up, markets to watch. I think pound US dollar is always interesting because of the volatility, and we had better than expected GDP numbers today. In the very short term, I think 130 is the big level to watch for the rest of this week. If we did see the market sell off, let's watch to see if we get some strength ahead of there. Stock markets are interesting because we have had such strong trends, and relatively speaking, what we've had over the last week and a half is a big-ish sell-off. But on the S&P, let's see how this 2860 level performs. Does it hold the market up? The DAX, the German market, because for the last more than a year now, moves sub 12,000 have brought buyers back in. It's still weak today, but let's see what happens down at these levels. And crude oil, again, just because that trend has been so strong, it's bounced back this week. It would not be surprising to see crude oil setting fresh highs as we go into towards the end of the year. It's a market that's still strong. So we will wrap things up there. We'll do it all again next week, of course. Thanks for coming along. I should say, you're probably on our YouTube channel now watching this. We uploaded, I think, 3 or 4 different strategy videos over the last week. So simple strategies and sort of stuff I talk about on these sessions, looking at bounces off support, failures near resistance, trend reversals, all that sort of stuff. I think they're only about 5 minutes long. So if you haven't seen those, you might want to take a look at those. But for this week, we'll wrap it up there, and I'll let you get on with the rest of your afternoon. Thanks for coming along, and we'll do it all again next Wednesday.